All right, welcome back to the Black Brain Trust. This is episode 260, economics. Please hit the like button. All right, had a bit of a mic issue again. Let me try this one more time. This is economics, episode 260. Please hit the like button as you come in. Share the video if possible. Document and description means the video as usual. This is an FYI. We are not certified financial planners. If you want a certified financial planner, please look up one in your area. I'm here with my co-facilitator, Dollar Will.
What's happening? What's happening, brother? What's happening, listeners? Peace to the chat.
I'm good, brother. Yourself?
All right.
All right. All right. How's your day been, bro?
Hot. It's been good. I can't complain. Zeke didn't show up, but otherwise everything is fine. That's Zeke of America's team, the Dallas Cowboys.
Okay. Okay.
That's about all I've been concerned with today.
Got about what, 30 more days to preseason?
No. We have about maybe about a week before the first preseason game, the Hall of Fame game. What is it, next week or something?
Mm-hmm.
Yeah, it's here, man. We're here. So in a couple of weeks, folks are gonna be talking about fantasy football.
Yeah, it's gonna be interesting now with all the technology and stuff that's emerging, man. That's gonna make it a lot more interesting with all these cryptos and whatnot. So.
Oh yeah, that's gonna really take the lid off when they start. That's gonna be that's gonna be interesting to see how they do that. Because all those, like, there are a lot of fantasy games where you get like these useless prizes. So I think a lot of cryptos are going to get pushed in that direction, because that would be a good way to familiarize people with cryptos, and just like give them coins, give them tokens that they never even cared about as a result of a fantasy contest.
Mm-hmm.
It's going to be interesting. You're right.
All right. What's going on, Terrence Forrest Jr., Wolf, Steep Technologies, and Gregory Wyatt? What's going on?
What's happening, brothers? Sleep Technologies. Okay.
All right. Give me a few seconds here. We can
I
share
mean,
my
is that
screen.
like a pickup line, or you work for like some kind of sleep number bed?
Yeah.
Oh, he said a pickup line. Okay.
No, it's Steep. It's Steep Technologies.
Oh, I thought it said sleep. I need some glasses.
Mm.
Oh man, I'm old. Steep. All right. Okay, brother.
All right. Let me get started with this. Should roll through this real quick. All right. This one is from CNBC.com. Amazon's cloud business reports 37% sales growth, but misses analyst estimates. Expand my screen out, man. Amazon reported 37% growth in its cloud business on Thursday, a number that came in below analyst estimates and suggests that Microsoft is picking up steam. The results contributed to a miss for Amazon as a whole. Amazon Web Services, which provides computing and storage for corporations, schools, and government agencies, said second quarter revenue rose to $8.38 billion, compared with the $8.48 billion average analyst prediction, according to FactSet. Growth slipped from 41% in the previous quarter. AWS continues to play an essential role in driving profit for Amazon, the world's second most valuable public company. In the cloud market, Amazon maintains a commanding lead over all other rivals, including Google, IBM, Microsoft, and Oracle. But Microsoft's Azure business is growing faster and picking up ground as the number two player. Last week, Microsoft reported 64% revenue growth in Azure sales. AWS generated $2.12 billion in operating income in the quarter, up from $1.64 billion a year earlier, and lower than the FactSet consensus estimate of $2.45 billion. In the second quarter, communications app provider Slack said it had committed to spending at least $250 million on AWS over the course of 5 years. That's just the latest figure to become public as more AWS customers file for IPO and divulge their hefty cloud spending. Ride-hailing company Lyft said in its prospectus that it's committed to spending at least $300 million on AWS over 3 years, from the beginning of 2019 through 2021. Pinterest said it will spend at least $750 million on AWS over the course of a 6-year period that ends in July 2023. AWS has benefited from a first mover advantage in the cloud market and has sustained growth at scale over the last 2 years. KeyBank capital markets analyst led by Edward Yurma wrote in a note to clients on Monday. There are a few business models at this scale that are still growing 38% year over year. AWS revenue accounted for 13% over Amazon's total revenue. Of Amazon's total $3.1 billion in operating income, 52% came from AWS. This is mega, because I tell you guys who are getting into IT, this is where you need to be making your investments in the cloud. Not at Best Buy buying, working at Geek Squad. This is where you need to be making your investments, because the cloud market is about to explode in 2020, as we see it right now. They just mentioned all the companies going to the cloud: Lyft, Pinterest, even Apple is spending big money on AWS right now as we speak. So Amazon is here to stay. AWS is a major player in the cloud space, but they're being challenged by Microsoft overall, because Microsoft has a lot of clients who still have legacy hardware that they're trying to get off. And once they figure out a way to get off of their legacy hardware and products, they're going to move straight to Azure. So what Amazon is missing out on is those legacy customers that are still stuck on Microsoft stuff want to get off the legacy stuff. They won't move to AWS. They'll move to Microsoft almost immediately, because all their eggs are in one basket for Microsoft. Whereas the ones who did not depend on Microsoft in the beginning, which was like Slack, Lyft, Pinterest, so on and so forth, those companies were always on AWS since the beginning. So they didn't really need to rely on your big brand names like Microsoft in the beginning. So you see sort of this the difference in how companies approach the cloud and how they approach IT. And so with that being said, always put your always diversify your portfolio when you're dealing with IT, especially as a staple. You always want to diversify your portfolio, because although AWS is big now, by 2022, that's going to be taken away from them, because Microsoft is moving in, and they're moving in heavy. So is Google. Go ahead, Otto.
Yeah, I'm just saying that you got to watch that space, because you think about it, it's a no-brainer if you start in a company. you would want to try to do as much as you can in the cloud. Why would you want to get into a hardware cycle that you have to keep maintaining hardware? I mean, you can move as much stuff to the cloud. That's infrastructure that you don't really have to support.
Well, some companies do prefer to have their own devices, but those are very far few and in between. What you're starting to see now is just more companies just just fire up straight to the cloud. It's that much cheaper. You probably could spend a lot less. So let's say a data center will probably cost you a few $1 million right off the rip, just for the facility alone.
Hmm.
That doesn't factor in all of these servers and whatnot that go into all the physical hardware or the gear, network.
Right, but I'm
Uh,
just saying, like in
yeah.
today in 2019, if you're thinking, okay, I want to start a company, what's it going to cost me? You, eh, it's a no-brainer. You're gonna figure out, okay, it's cheaper if I just factor in whatever the fee is to make as much stuff cloud-based.
Hmm.
It's possible. I mean, especially when you're starting up, when you have that fee to get on, but it seems, but that's more or less like a more fixed cost, and you can scale up as your staff increases, as your project gets to be more complex, or you need more server space or more features. It's just a no-brainer.
Yeah. Speaking of complex designers in the chat, what's going on, bro? All right. This next one is from MacRumors.com. Apple acquiring the majority of Intel smartphone modem business. As rumored, Apple today announced that it has signed an agreement with Intel that will see Apple purchasing the majority of Intel smartphone modem business. Approximately 2,200 Intel employees will be joining Apple, and Apple will also take over Intel's related intellectual property, equipment, and leases in a transaction that's valued at $1 billion. At $1 billion, this is Apple's second largest known acquisition after Beats. Combined with Apple's existing wireless technology patents, the Intel acquisition will give Apple more than 17,000 wireless technology patents in total, ranging from protocols for cellular standards to modem architecture and operation. Apple says that Intel will continue to develop modems for non-smartphone applications such as PCs and Internet of Things (IoT) devices, and autonomous vehicles. Apple's VP of Hardware Technologies, Johnny uh, Soroji, said that Apple is excited to gain new engineers with expertise in modern development with the Intel team set to join Apple's uh, Cellular Technologies group. We've worked with Intel for many years and know this team shares Apple's passion for designing technologies that deliver the world's best experiences for our users, said Johnny Soroji, Apple's Senior Vice President of Hardware Technologies. Apple is excited to have so many excellent engineers join our growing cellular technologies group and know they'll thrive in Apple's creative and dynamic environment. They, together with our significant acquisition of innovative intellectual property, will help expedite our development on future products and allow Apple to further differentiate moving forward. The acquisition, says Soroji, will allow Apple to expedite its development on future products, which likely includes Apple designed modem chip that that's in the works to reduce its reliance on Qualcomm and other more modem chip suppliers. Apple has been working on developing its own modem chip. The technology will the technology won't be ready for another few years, but the acquisition of Intel's modem chip business could allow Apple to significantly speed up its modem chip development. Intel CEO Bob Swan said that selling Intel's smartphone modem chip business to Apple will allow Intel to putting its 5G efforts into other areas. Rumors earlier this week suggested Apple was in advanced talks with Intel, and that a deal could be announced in the near future. Apple and Intel uh, have been having discussions about an Apple acquisition of its smartphone modem business since last year. The talks paused temporarily when Qualcomm and Apple settled their legal differences and reached a new supply agreement, but resumed not too long afterwards. Intel announced back in April that it was planning to exit the 5G business, sharing the new shortly sharing the news shortly after new Qualcomm Apple deal was announced. So for a lot of y'all that don't who don't really follow this stuff, Apple and Qualcomm got into a patent dispute, and Qualcomm actually won over them. Um, and what's happening here is Apple does not have the portfolio necessary to keep up with supply and demand um, of their products and of development. And to that extent, what's Apple is going to have to do, or what they have done so far, is actually have to go after and find talent in other places that they just don't have, and that place had to come from Intel. Intel has been, um, a PC processor maker for a long time, but they've also always had different divisions um, within their organization that worked on various amount of chips, including modems. So this was not uncommon, and I saw this coming from a mile away that they were going to do this.
Okay. What's a smartphone modem? I mean, I know what a modem is, but in this world of Bluetooth, what is a smartphone modem used for? I know it kind of
For your voice
gloss
and your
over
data.
the. Hmm?
For your voice and your data. So what that modem does is it allows you to connect to your cell phone provider, your cellular services provider. So AT&T, Sprint, T-Mobile, Verizon.
Uh,
So what Apple did not initially have that in the beginning. They always relied on Qualcomm or Broadcom for that matter in the beginning. So it was much cheaper. It was cheaper for them to do it, and they didn't have the patents. But now that they do have the patents, they also need the expertise, and that's where Intel comes in because Intel is a juggernaut in this area of building modems for smartphones and mobile devices. Um, I would suggest that maybe they're looking at 5G and they need to hurry up and speed up the development because they don't really have the bandwidth to do so. Lack of a better description, lack of a pun too. They don't have the bandwidth to do so because Samsung is coming. Well, Samsung already has a 5G Galaxy coming. I think next month or something like that. So um, Intel, I mean not Intel, Apple is behind the ball in terms of technological development. They don't have all the latest features that other um, competitors have. Samsung, Huawei, especially Huawei already has a 5G phone. They have 5G towers already up. So
so this is just Apple bringing something in house.
yeah, they desperately needed this. This was a desperate move on their behalf.
So is this a in the long run, this would save money for Apple?
No, speeds up development and
Yeah.
reduces dependency on their providers.
Is it cheaper to do it yourself, or is
It's
it
always
cheap?
more expensive to do it yourself. Always
Yeah.
more expensive to do it yourself, especially if you're not fabricating your own chips. You got to fabricate the chips somewhere. But based on what the article is saying in the press release is that they're getting all the equipment too involved in it. So they acquired all the equipment to make the chips and stuff. So
So this is about Apple meeting their demand for the hardware they need by by,
yeah,
by, by making it themselves.
yeah, yeah, not in reducing their dependencies in the market in the global market because the
Which
Qualcomm
costs them money, which costs them money by lost sales if they can't turn out. the inventory, create the inventory fast enough.
It also, yeah, that and they also hurt them in terms of the lawsuits. The lawsuits really ate a hole into their wallet, despite the fact that they're number one global company. That any sort of multi-million dollar settlement is going to hurt you in the long run, because now you have to redraft all your equipment and all your devices and all your policies and all your paperwork and things, all the legalese that goes into it. You have to go all the way backwards just to settle some things. That can put a flat tire, so to speak, on into your vehicle. So this was a strong arm move for them. We got 35 people watching, only 20 likes. Please hit the like button if you're not going to participate in the chat.
We need the likes. Likes are free.
Oh yeah. But yeah, this is a necessary move because the article stipulates that they won't be getting the modems for the autonomous vehicles. Intel is holding on to that. So if Apple is looking at this as an alternative measure, but they're also not getting the autonomous vehicle application aspect behind, this modem business. So maybe they're going to finagle their own little chips and stuff to apply for the autonomous vehicle sector. I honestly don't know what. At this time and point, I mean, you and I have talked about this in the past. I don't think it's a good time to produce a vehicle. To
Right.
be quite honest,
Right. I agree.
no one's buying cars anymore. It's just not that sort of market. Maybe 10 years ago that made sense, but now it's not a viable market. I don't know. Maybe Apple might be looking at drones, right? They may be looking at competing with what do you call that?
Right, but
Rolls Royce, Rolls Royce and Bell helicopters and stuff like that. They may be looking at that. They may be looking at further down the line, because when it comes to vehicles, there's a lot of things that go into making a car, and you can see Tesla has been hemorrhaging, the last maybe 10 quarters, 12 quarters, or something like that, just to turn profit, because their cars are the cost to develop it, is actually pretty steep, and they're not, they don't always see profit, even though Tesla is not a bottom of a barrel company. They're doing all this in house, and it's really really expensive in comparison to, let's say, Ford or GM or Chrysler, because they already had the facilities and stuff up and going. So it was easy for them. It's easy for them to just convert a facility over and then retrain their guys for 6 weeks or so, or whatever time it takes, a quarter, and get them to produce these electric vehicles. Whereas for Tesla, they have to come from scratch. For Apple, they have to come from scratch. So if Apple's looking at this from a profit margin, it's going to be a long road to actually turn profit on this.
right. But if they want to get into that business, that's not something you start at the last minute. You start that years before you intend to do it. And so this economy could have bottomed and entered a new growth phase, and by the time Apple gets around to actually going and mocking up something, okay. But if that's their long range plan, then now's a good time to get cracking at it. That they have time on their side. Like you said, cars aren't selling right now.
Yeah, for a lot of reasons, including
Right.
the fact that the range of an electric vehicle is just not there. It's there, but in comparison to a 2019 gas-based vehicle, it's not an apples to oranges comparison. It's not like
Right.
a Tesla Model S gets 380 miles to the charge, whereas a gas-based vehicle a Honda Civic might get 410, 420 miles to the tank. So it's not one to one yet. Once it becomes one to one and exceeds one to one, then you'll see a justification for people to get out of gas-based vehicles, and that's where Apple will benefit.
I don't know. I can't go more than maybe 200 miles, somewhere between 2 and 250 on a tank of gas. That's it for me.
You have a V6 though.
Yeah.
Yeah, you have a V6, so it's a little bit different. But four-cylinder cars, they definitely get 400 plus miles to the tank. All right, let me get to this next article. USA Today. Apple, Dell consider moving China production in trade war. Who else? A growing number of companies have said they are pulling production out of China, alarmed by the intensifying trade war between Beijing and the U.S., including Apple and ASICs. About 41% of American companies are considering shifting manufacturing from China or have already done so. The American Chamber of Commerce in China said in a recent survey. At least 50 global companies, including Apple, Dell, HP, have announced or are considering alternative plans to manufacturing out of China, according to research by Nikkei Asian Review. The Trump administration has imposed tariffs on $250 billion on of Chinese imports as part of its year-over-year part of its year-old trade war with China, and its threatening duties on another $300 billion in shipments. In the first half of 2019, China's exports in the U.S. fell by 8.1% to $199 billion, according to the National Bureau of Statistics. Tech. Apple is considering moving 15 to 30% of its manufacturing, including the latest iPhone production, from China to India. Dell may move its personal computer production to Taiwan, Vietnam, or the Philippines. HP is also considering Southeast Asia. GoPro, the mobile camera maker, has its sights on Mexico, Nikkei reported. This is important because Apple moving from China to India is a big move. That's not something that just happens overnight. That's something that, they have been long thinking about this. India has a lot of human capital, and I don't know, and I don't like to prejudge, other ethnicities in this regard, but I don't know if India has the bandwidth capable of dealing with manufacturing at that level. I mean, they have just as many people in India as they do in China, but I don't know what their capacity is. I know China, they could find electrical engineers all over the place, but I don't know about India. But if Apple is making this consideration, man, that's really big, man.
So you're questioning if India has the staff, the trained personnel in large
Yeah,
number.
to keep up with iPhone demand, right? If the next iPhone is going to be a blockbuster, or the next iPad is going to be a blockbuster product, I don't know if this is going to be in Apple's best interest, because India is not known for producing a whole lot of electronics goods. Usually that stuff is really, China's like the master at that stuff. I don't know how they figured it out, but a lot of their population is very adept at manufacturing of electronics. So, and to manufacture electronics, you need a lot of electronics engineers and technicians, and China seems to turn them out just as fast as they go. India, on the other hand, I'm more of a software development capital, because they develop a lot of software for people. So, um, but Dell making a move to Taiwan is actually a political move too, because um, the only country that really recognizes Taiwan is America, anyways, the United States. So, but if they're also looking at Vietnam and the Philippines, those are major areas. That's China's um, rival in Vietnam, and then you have the Philippines, who hurting for money financially, and they beyond tourism. That could boost the Philippines economy majorly, at least one third of their GDP. So, all right, let me look at this. Let me read the rest of this. Apparel and footwear. Brooks Sports is relocating its running shoe production to Vietnam. Again, Vietnam. Skechers, an American shoe company, is in India now. ASICS, a Japanese footwear producer, is also looking at Vietnam, Nikkei reported. Steve Madden, the footwear and handbag maker, shifted its production to Cambodia. Interesting. The company said. Gap, the clothing and accessories retailer, has started up factories in Indonesia, Vietnam, and Bangladesh, the company said. Equipment, Komatsu, a Japanese company that makes construction and mining equipment, has relocated some production from China to the U.S. Interesting. And Thailand. Panasonic moves its in-car equipment production to Mexico, Nikkei reported. Even Chinese companies are considering leaving the home country. TCL, a Chinese multinational electronics company, is moving its TV production to Vietnam. Glorotech, a Chinese acoustics company, components company, is starting up a new factory in northern Vietnam to make wireless earphones, according to Nikkei. Gary Hofbauer, senior fellow at Peterson Institute for International Economics, thinks more manufacturers will move from China, but there likely won't be a wholesale departure. It's very expensive for a company to change suppliers, particularly if quality is an issue. For example, with electronics components or machine parts, he says. China's economic growth slowed 6.2% in the second quarter of the year, the weakest pace in 27 years, the government said. So that's what I was pointing out before. For them to move to India is a mega move because it's very expensive um, to retrain people, to find talent, to supply chain logistics of manufacturing of parts and goods and components that go along with this. To go all the way up to India is really big. So, but hearing all these clothing companies get out of China also spells a lot of doom for them too, because um, once you move, you only move so many years, so many times in a few years. Your manufacturing being produced in Vietnam means you're going to be there for the long haul because it's based on um, the cost of production. Uh, Same thing in Indonesia and Malaysia and these places. All those companies all those countries that are hurting are going to benefit greatly from this whole entire trade war. Um, so, what I'm saying here is for people listening is that China China is going to feel a ripple effect in the next maybe 2, 3, or 4 quarters, probably all the way up in the second quarter of 2020, if this even goes through. So, will you have anything you want to add to this?
No, you pretty much covered it. Yeah, they definitely gonna feel that.
Hmm.
They definitely gonna feel that, man, 'cause that's not just one or two companies. That sounds like a whole domino effect.
Hmm.
But yeah, they're gonna be feeling that for many years. And you're right. You don't go because of quality control issues. You don't change your your manufacturing or your production uh, center. Okay, that's not something you. That's not a flavor of the month kind of thing. Especially you moving from one culture to another. It's a lot. You know, and you are putting your brand at risk if you have like a severe fluctuation in the quality.
Right,
So
right.
that's not a chance. That's not something you want to risk any more than you have to.
Hmm.
So
Even Chinese companies don't want to, manufacture in China anymore, right? TCL is getting out. For those of you who don't know, TCL is a Chinese branded company that acquired uh, Sharp Electronics flat screen panel division. So you don't see too many Sharp TVs anymore because TCL acquired them. TCL also acquired BlackBerry phones as well. So TCL is a major proponent in the TV screen industry. So actually, a lot of your TVs are actually made by them. They just rebrand them to like Vizio and whatnot. Hey, what's going on, old man? What up, Kareem? All right, this one is from investing.com. Cannabis investors learned the hard way to play the long game. Speculation in the cannabis sector has switched gears of late. No longer are the latest estimates of the size of the growing marijuana market the topic of easy conversation. Now, the conjecture is focused on the future of one specific company, CanTrust Holdings Incorporated. The Ontario-based medical marijuana grower was thrust into the headlines earlier this month when it was publicly disclosed that it had contravened regulations by growing thousands of plants in unlicensed spaces in its greenhouse operations in Pelham, Ontario. The fallout from the revelation has been far-reaching. It has resulted in the halt of sales of the company's brands, product exported to Europe being put under quarantine, the launching of the formal inquiry by Health Canada, the federal cannabis licensing authority, the creation of a special committee to conduct an internal probe, and by far the most dramatic for investors, the 50.49% plunge in the company's market capitalization as investors turned and ran. The loss represents a nosedive of slightly more than 500 million Canadian dollars or 380 million US dollars in the market in the value of CanTrust stock. On Monday, the embattled marijuana producer issued a public statement about the special committee created to look into the non-compliance complaint. The four-member committee, chaired by Robert Markovich, a member of the CanTrust board of directors, has been also tasked with making recommendations to the company's board of directors on matters related to the controversy, specifically to report on how it will affect the company's assets, inventory, sales, and revenue. The, the public statement was short on details, but did confirm that the company had submitted a response to the Health Canada non-compliance report and is now awaiting a response. Markovich tried to reassure investors. The special committee takes issues very seriously and is committed. The special committee takes these issues very seriously and is committed to working with Health Canada to bring the company into compliance. Although we want to move as quickly as possible, we are mindful of the critical need to be thorough. We are determined to identify the root causes of all non-compliance issues, to take appropriate actions to address and remediate any issues with the company's compliance culture, and to restore trust in the company. But the statement did little to halt the stock's slide. CanTrust stock lost another 1.44% on the New York Stock Exchange yesterday to close at $2.73. It is down more than 10.5% in the past week. Buyout talk. As the company awaits a ruling on its licensing, a report by BNN Bloomberg yesterday claimed bankers have had preliminary talks with two Canadian cannabis companies to see if there was any interest in a buyout of CanTrust. Such a move could avoid the grower losing its processing licenses if Health Canada opts to come down hard in retaliation for breaking the rules. There is no sign of any deal being struck, however. So as we as all eyes cast about to see who to make a move, or which company wouldn't even want to at this stage, investors are seeing a lot of red when it comes to stock prices. The last month has taken a toll on just about all major cannabis companies, with stock prices being pummeled across the board. After CanTrust, the hardest hit in the past month has been Quebec-based Hexocorp, which plunged 16.49%, followed by Canopy Growth Corp, down 14.25% drop during the last month, followed by Afria Inc., um, down 10.2%, Aurora Cannabis down 8.81%, and Kronos Group down 8.69%. But if you're steering high into long-term horizon, the big pot companies have still generated above normal returns. Here is how they rank on a year-to-year basis. Kronos Group, 33.73% year over year. Hexo, 31.21%. Aurora Cannabis, 29.79%. Green Organic Dutchman, 26.42%. Canopy Growth, 24.8%. Afria, 3.18%.
Yeah, that's year to date, so that's even better. So that's since January.
Yeah.
Good.
Yeah, I wish Complex Design was on the panel because he'll be able to speak more in depth to this because he's more familiar with this. If you all have not checked out the Business Wealth and Power Cannabis Talk on Black Brain Trust, make sure you go to the archives and look at the first of the month.
Yeah, I would say as a trader, first off, this is why this is just me, my personal preference. I try not to buy individual companies for this very reason. You know, you have to worry about some impropriety happening at that company. You know, they in this case, this is a medicine. This is medicinal product. And you can't have quality control issues coming up in something like that. You know, these they were growing the pot in places that were not authorized by the state, by their health department. So all it would take is somebody to get, have some kind of adverse reaction, and they hear that, it's on record that there was essentially no quality control with
Well,
a medicine. Oh, that's like a lawsuit right there. All the framework is already there, and that's why those investors got the heck out of that.
I also would have, and I agree with what you're saying, but I also think that a lot of the regulation and has so much red tape, it's almost impossible for them to do business. So I can see that they would actually take shortcuts and try to skirt around some of the policies and compliance for that very reason, because it cuts into their research and development budget, it cuts into their return on investment. I think maybe this might just be a Canadian thing because the Canadians then do tend to be very strict on businesses, and that's why you don't see too much innovation coming out of Canada because of that very reason. There's too much regulation, there's too much red tape. A lot of your innovation is coming out of the United States and other Western countries, but not Canada because Canada is too damn strict. They don't even make their own cars.
Yeah,
Um,
let me just say this now before I'll punt to Ulysses to have the final word on it. But you got to follow the rules, especially when you're talking about something that's medicinal or even investment grade. You just cannot cut corners and violate law because it puts the investment at risk. That you can't do that. That it'll come back and bite you. So that's why I like ETFs. Let's say like this: if there's a basket of such stocks and one company goes rogue, that's not likely to affect the whole basket, at least not to the degree that it will that one company. So that's why I pretty much try to stay with ETFs, and I pick a winning industry and I find a way to bet on that whole field, so I don't have to pick individual companies. Now, the downside of that is a one star superstar company within a field will more than likely outperform me, my basket approach. But I sleep better at night. Now, that said, the whole space, I have not looked at the chart for it recently, but I am interested in it. My mindset is that's a space to buy on the dip, because it seems to be tracking like I said several months ago that the marketplace, although it has nothing to do with cigarettes, but the way the money flow in terms of the way the stock is moving, it seems to be moving in sympathy with tobacco, and that's in a space right now where a lot of money is going to end up with as people are stressed out or cautious about the viability of this market continuing to move higher. So when you see a space like that, what they're considered sin stocks, although this is a health stock, but the charts does seem to move a lot like Altria and Philip Morris. That this is going to be one of those spaces where people are going to come back to. So it's one of those things. Yeah, you listen to the headline, but as a trader, I'm watching the money flow. This is going to be this. If you're going to get in any investment at an attractive price, you always going to end up buying when other people are not. So this is one of those things you have to do your homework, figure out your approach, and look at the charts. You got it, Ulysses.
What's going on, bro?
Hey, Dollar Willie, Mike, what's going on?
Chill, man, chill.
Hey, everybody in the chat. Hey, Mike, I was in and out on. I know were you talking about Aurora? Which company were you referencing?
The actual company. Go ahead, Dollar.
Yeah, there's a Canadian company in particular that was had unauthorized grow houses or sources that was producing their marijuana. It was a Canadian company.
Yeah. I mean, we're still in the wild, wild west of all of this.
It's called Cantrust stock.
Cantrust stock. Okay. Yeah. I mean, we're still in the wild, wild west with a lot of this stuff. I mean, there was just this huge bust that went down in Santa Barbara, I think it was, or like a suburb of Santa Barbara. It was a whole lot of wheat that was basically confiscated by what regulators are saying were illegal growing operations. Go ahead, Mike.
No, I was just gonna say this is like the Moonshine Boys.
Oh yeah. This is the space that we're in right now. This is the reason why, it's kind of hard to parse what's what in the industry. It's kind of difficult to make a sound investment decision because I'll tell you right now, even some of the big boys, like not all of their weed is on the up and up where it's coming from. There's a lot of guys that have had skin in the game for quite a long time, and they didn't just go down easy when legalization hit, especially in states like California. That bust that I was just mentioning, I'd have to find the article on it because it's funny. As you were doing this, I was scheduling the hangout for Sunday, the cannabis talk for Sunday. I just scheduled it, so it should pop up on our channel now. You guys should see it. So we'll be going in depth on a lot of this stuff here on Sunday as well. But a lot of those grow operations aren't fully licensed. Let's just say you have growing that's being outsourced, if you will. Right. See, so I'm going to source it from you. I'll get it from you, right? Because we're the licensed company. So there's a lot of quasi legalities, right? Because I might be growing. I'm contracted to grow for you. And as a producer, you could legally do it. However, my documentation may not necessarily be on the up and up. You know what I mean? So there's all these gray areas. It's not like traditional agriculture as we see it today. Like a person who grows oranges, for example, right? They're a navel orange producer or something like that. There's kind of like a method of going from seed to sale on it. They're trying to institute this stuff, but we got to realize that on the one hand we've got companies in two different countries, United States and Canada, competing. Okay, once one country is fully legal, the other one the legal statutes are based on state. They're based on state statutes, right? The federal government still hasn't changed its position on it. Okay. We have one article we're going to cover on Sunday. The Fed is still kind of lagging on getting down to the specifics with regards to like hemp and like CBD derived hemp and all that. Meanwhile, you got Massachusetts. Mike, you've been sending me article after article about Massachusetts just saying no to everything, even though according to the Farm Bill it's legal. See, so there's a whole bunch of like legal gray areas and loopholes, and it's very easy to put your money into some cannabis stock or something like that and lose it. You know, or you see a cannabis stock, you know, taking a rise on some news, and the next thing you know, they're taking a dump because one of their large scale suppliers just got shut down. You know what I mean? So yeah, it's kind of all over the place. You know, maybe like on Sunday we'll go. I'll kind of give you, you know, go into more detail as to what I think are safe bets in this space, or safer bets, I should say, not safe.
See, I like that volatility.
It's not bad. Volatility is not bad, depending on how you hedge it.
Right, I like it, but yeah, you do have to be very careful. You gotta, you know, if you're buying an individual company, you have to get into the details of that company. You know.
Well, I think at this stage, though, well, you know, I kind of like your idea of just buying into ETFs.
Right.
You know, because there's too many. It's too new.
Right, and I don't have that kind of time. Personally, I don't have that kind of time.
Yeah. You don't have time to see if this company you buy into over the next 15, 20 years is going to turn, especially at the rate at which companies get bought out nowadays.
Right.
You know what I mean? It's like investing in one company, you know, hedging on something at this particular juncture, it would be like buying into like a moonshine producer back in the day. Now, you don't know who's going to ultimately turn out to be like the Jack Daniels, and who's just one of those bootleg, bootleggers that just kind of went about the way of the dinosaur, you know, when their time was done. It's kind of like the same thing with, there's so many companies that have come and gone that look attractive on paper, you know, right packaging for the product, the marketing is pretty slick. It's just, you know, so much of the market share was scattered across the board that, you know, it didn't outpace what the industry was doing, and they kind of fell by the wayside. Plus, you have to factor in changes to legislation. Mike had sent an article through some company in Massachusetts. They were going to be making like these CBD, like this craft stuff, CBD infused jellies or something like that, right? So based on the Farm Bill and all the the legalization measures that passed with the Farm Bill, this guy in Massachusetts, he buys in on this whole operation, right? Spends all the money on all this stuff. Then the state of Massachusetts turns around and tells him he can't do it. So right then and there, you hedged a business idea, right, based on legislation that says that it's legal, and then the state that you're operating in says and just like that.
I'm dropping in the chat. I googled marijuana ETFs. So you can Google cannabis ETFs. You can, you know, come up, you know, do your own research. But this will get you guys started. I haven't read this article. I don't own any marijuana ETFs yet. But this will get you started to kind of, you know, if you're interested in going the ETF route.
And if you guys want to look, the last cannabis hangout that we did, I think we had Engineering Cannabis. He joined us on that one, and I think we did actually cover an ETF, a cannabis ETF that's come onto the scene with a basket of companies and stuff. And there was some other mentions of other ETFs that are kind of in the competing space. So if you reference that last Black Cannabis talk, I think we covered an ETF.
Yeah. See what you do. I was just going to say you find if you have a few cannabis companies in mind that you know you want to be involved in, you can break down those ETFs. They'll show you.
Yeah.
On bar charts and Yahoo, different sites. They'll kind of give you a sense of the major companies that are held by that ETF. So if you find the ETF that has the individual companies that you know you want, to be invested in,
Yeah, buy it.
that's one of the, that's one of the ways how you can figure it out. Which one you want. What were you saying, Mike?
No, Dollar, can you explain to the people who are listening what an ETF is?
ETF is an exchange traded fund. Let's see. I'm gonna assume everybody knows what a mutual fund is. A mutual fund, the difference be a mutual fund is a basket of stocks. But the issue with mutual funds is you cannot trade a mutual fund intraday. You have to go in and enter that you want to buy it, and you get the price at the 4 p.m. or the close of the market. That's the price you get. So when you sell, you're getting that price, and when you buy, you're getting that price. So if anything happens in the middle of the day, and say the stocks in that space are dropping for some reason, and you want to get out, if you have a mutual fund, you can't. And I believe the fees for mutual funds are greater than exchange traded funds. So an exchange traded fund trades just like an individual stock. You can buy it and sell it at any point during the trading day, whereas with a mutual fund you cannot. So that's the main functional difference, and then the fees are a little less than a mutual fund. But that's the primary problem that ETFs solve, and you get intraday. Go ahead, Mike.
Now, Complex, you were promoting an app before that would allow you to engage in ETFs as well, right? Investing in ETFs.
That was Robinhood. I'm not sure which. I'm sorry, I was eating a carrot. I'm not sure what ETFs. Go ahead, Mike. I know you got a joke, dude. Go ahead.
I don't have a joke. No, I wasn't sure if you guys were still promoting. That's why I didn't want to mention the name. I just thought that if you were still promoting it,
Oh,
because all brokers don't sell all products. And so, so if you have something like an ETF in mind, you might go to a Robinhood or another smaller company, a broker, and they may not have it, may or may not have it. But one that I'm nothing against Robinhood or any of the smaller ones, but for the bigger ones, I know I'm a fan of Charles Schwab. I have several accounts there. They have essentially everything, and they have some like really key things that you want. They have in a certain let's see, they have some low or no fee ETFs. So you can get a lot of options at Charles Schwab, ETF options, investment options. I'm not, as opposed to stock options. you have a lot of choices at Charles Schwab, where the fees are reduced. They should be paying me for this, but yeah.
I know, right? Promoting Charles Schwab. Yeah, I would say whatever, just because I have a Robinhood app on my phone, that's typically what I defer to. But whatever institution you can find those ETFs, whichever institutions make those ETFs available, so you can buy into them. Yeah, whichever one.
Good evening, guys. Can I ask a question
Hey,
about
D, what's up, man?
one question about this. I don't know if anybody can deal with it, but if you're going to buy a marijuana stock, wouldn't it be better for you to buy one, say, in your state where you live? Because then the state. You can also research your state laws. You might not understand California law, but you might understand New York law.
If you were buying it on the individual level, then that might make sense. But we're talking about with an ETF, that adds all of them as one major trade.
Yeah, I understand what you're saying about ETF. I know what ETF does. I know it kind of your investment your ETF exchange. Let your investment be spread out across a lot of stocks. So
basket of companies.
You don't lose. Like if you buy one stock, your stock might go down 5%. whereas the ETF may go down 0.5% or less because of that one stock. You understand? So I understand that part of the trading. And
But you say
but
as far as an individual or like
yeah,
from
because I used to be involved in mutual funds. I had mutual funds and Fidelity, but I would still buy individual stocks. Some of the individual stock that was in the mutual fund, and my stock might go up. You know, like a healthcare stock. I buy healthcare stock, and the healthcare stock will go up 10% that day. You know what I'm saying?
mm,
And the mutual fund, my mutual fund is going to go up by a dollar amount, which might be $100.
Who was
You
your broker or
know,
brokerage?
Fidelity. I use Fidelity, but I use mutual funds to kind of maintain. Say I have 100,000, I put like 60,000 mutual funds, 70,000 mutual funds, and then I'll put the other 30,000. I'll buy individual stocks.
Hmm.
You understand? I might buy 100 shares of this, 100 shares of that. The case might be. But some of those stocks were also inside the mutual fund that I own,
right.
and I see that the way they moved, that they were like, say, like Apple. You understand? I'll buy 100 shares of Apple stock. You know, but it was inside my. It was also in my mutual fund, and the shares that I had were moving faster with pricing. I was getting more gains out of my individual stock than I get out of the
Then you
mutual
were
fund.
out of the ETF or the mutual
Right.
fund.
But the mutual fund is my safety net, kind of like I'm kind of keeping my 70,000 because I want to keep that for my retirement, so to speak.
You know,
Yeah.
I guess the only thing, DE, is that I haven't seen because this whole cannabis industry is so new that
Yeah.
it's just like what Dollar Will was saying. There's too much volatility. I think to go all in on say like one company or whatever.
Right.
I think
I
I think
agree.
I think the ETF. Yeah, I think until we start to see like some maturity in the industry where you start to have maybe like your larger players who are going to be mainstays, and then I think that's when you'll want to start go ahead and buying individually into those companies. But as a whole, it's too much. There's too much volatility. There's too much um, regulatory uncertainties. Shit, it's still not even legal on the Fed, and here we are talking ETFs and everything, right? So, um,
I think a major driver is going to be the outsourcing into Africa because there's so much vast land, there's so much potential for the agricultural aspect
mhm,
behind it. It will cost them pennies on the dollar to actually grow it there than to go through all the litigation and stipulations in their native state in their native land where they would just outsource it there and then package it up there and then ship it to where they need to ship it to.
mhm. Yeah, I mean, we've already started to see proof of this with Uganda exporting to Canada and Germany.
And Zimbabwe going legal.
Yep. Yeah.
Yeah, like I
Another,
go ahead.
yeah, I understand the what you're talking about the ETF. But what I'm saying is, like, I'm saying for like individual like me who got the ETF or have a mutual fund, who got like 10,000 I want to play around with, you know, that I can lose 5,000. I don't want to lose my whole 10,000 because it'd be stupid. And one day, not even one day, I say I can take a loss of 1,000, you know, with something like this, you know. But I'm looking at the gains and saying, well, the gain, uh, the market look for me, the volatility in the market, I can use that to my benefit, like Dollar Will was saying. He likes volatility, you know, and I'm the kind of person to say, well, you know what? I already got that $100,000 put away. This $10,000 is like one that I spend, going out traveling with, and I'm not traveling for the next 6 months, so let me play
Hmm.
around with this. And that's the kind of thing I'm talking about. The other question I got is, shouldn't all of these companies have compliance officers? I mean, you got to have a compliance officer looking at what state or country that you're in to see what the rules are, and if the people that are growing your stuff are complying with those rules.
No,
Oh,
they knew it, man. They were intentionally they were cheating the system. They knew what they were
yeah, I
doing.
was gonna say, yeah, that's why I was telling Dog when I first got on, like a lot of these companies they'll outsource to people who have already been growing, and they may or may not be like legal in terms of like their operation, but if they're contracting out to a company that does have the licensing and permitting to be a quote unquote producer, then there's some quasi legality to all of this. And that's the thing. There's no set firm legislation on all of this. We simply can't have that when you have regulatory overlap, right? You have in one venue, you have statutes that say this is perfectly fine. And then on a Fed level, that says this is absolutely not fine.
Yeah.
Okay, can I speculate? I have no authority on nothing. I'm just going to use dollar bill street corner logic.
We got your last statement, and then we got to go to the next article.
There were some legitimate firms. How much you want to bet? There were some legitimate firms figured out that there were some illegitimate firms making money out the back door, and the legitimate firms dropped it down. How much you want to bet?
I wouldn't even bet you because you would automatically win because that's what happened in California with that bus.
Oh yeah, that's happening. A lot of snitching going on.
I don't know if that's snitching, man. If somebody's taking money from you, you know.
We'll cover that on Sunday
I'm
because
trying to do everything the right way, follow all the laws, which means that I can't really do it as efficiently as somebody who's growing it and they're violating all the laws.
the thing was like in California, and I'll just say this, and I know Mike wants to move on to the next article, but in California, the guys who got busted, they were actually doing it legally before Prop 64 passed. Once Prop 64 came, all of a sudden, everybody who was doing it was now illegal, and these new guys who came in, who had no business here, all of a sudden have businesses and wrote the regulatory statutes for what was going to be legal going forward. So now all of a sudden they're legal, and everybody else who was doing it wasn't. So we can discuss that on Sunday, though.
All right. Let me get to this next article. This one is from the Wall Street Journal. IRS sending warning letters to more than 10,000 cryptocurrency holders. I know might be one of them. Oh man. The Internal Revenue Service has begun sending letters to more than 10,000 cryptocurrency holders warning they may have broken federal tax laws. The agency wasn't specific about the possible violations it was reviewing, but those who hold digital currency could be subject to a variety of taxes, especially on capital gains. Let me see if I can get behind the firewall, or the paywall, I should say. If I can work some magic over here. See if this works. Apparently not. So basically, that's a skinny. The alphabet agencies are going after the cryptocurrency holders. I always find it interesting that they seem to figure out all this stuff. They'll go after him, but Trump doesn't have to show his taxes. Anyways, I guess if you hold cryptocurrencies, you might want to consult with a certified financial planner and a certified public accountant in your area. Go to CFP.net and look up one in your area and consult with them about taxation laws around cryptocurrency hodling. If you're hodling, you will be subpoenaed if you don't pay up.
Wait a minute. So this wouldn't necessarily be for like tokens. This would be for cryptocurrencies that you purchase.
Yes. If you've been on Coinbase or any other, if you have a digital wallet, more than likely you will be taxed, capital gains. because there is the fluctuation, volatility of cryptos goes up and down, right? So you actually gaining in some areas.
So are they calculating the capital gains based on the dollar equivalent of the gains that you made in cryptos?
This or not actively reporting this type of stuff, and they're getting away with it. And now the IRS is saying we're coming after you too.
Hmm.
So
Yeah,
do your due diligence.
I'm sorry. I kind of bailed away on this. So you're saying that the people are, I hate to do this. I should have been paying attention and drifted. So you're saying the IRS is coming after people who have not, who are not paying taxes on their crypto trades?
Yep.
Yeah, the more than likely the broker turned them in.
Well, the IRS is paying attention to all this stuff. Because if you're buying it through some uh, Binance or something like that, and 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 the IRS is paying attention to all this stuff, they're looking at it. They're looking at cryptos. I took there's actually a committee on the Hill that actually looks at this stuff now. So there's a blockchain and cryptocurrency committee that's looking at this stuff now. So the IRS is closely paying attention now too. So if you have cryptocurrencies and you're holding on to them, you're getting returns on your investment. Be aware that the IRS is watching.
So you would have to report those gains.
Yes, there's a tax form that's available for you to report it.
Yeah, it's like I know. I don't trade crypto, but I just know with stocks, it's very clear. You know if you trade in stock, the broker tells you that this information is reported to the IRS.
Yes.
So down. So if the broker is sending the IRS information about your profit, your transactions, and then you're not sending in a tax form mirroring what the broker has sent in about you, you've already been dimed out.
How do you so are we you're paying a capital gains tax on
Gain profit.
okay, gaining profit on what exactly though?
Your cryptocurrency.
Right. But see the crypto isn't something that's recognized by say for example like the FDIC. Has the SEC even made a firm ruling on what it considers a crypto?
Okay. From the articles we covered, they made a distinction between was it Bitcoin, or they named one particular. They didn't give a pass to the whole crypto space, not in the articles that we covered. So it's like a big question mark,
So that's what I mean. If it's a big question mark, because I don't.
Clarifying it now. Basically, they're clarifying it now.
Yeah, well, okay, but in order to say that somebody's cryptocurrencies are liable to a capital gains tax, we'd have to know what that asset class is, so you can determine what's the scale in terms of the capital gains that you're making. Or I'm not even sure there's anything that's set that recognizes cryptocurrencies as any sort of asset, right? You have one regulatory body looking at it as one thing, another regulatory body considering it to be something else.
Okay,
right? But it's not actually formally recognized as
this
anything.
This is a question for somebody who has traded crypto for the last several years. It's not me, because I don't own any. When you go to fill out your taxes, is there anything on the tax form that accommodates cryptocurrencies? Because if it's not on the tax forms, if it is on the tax forms, that tells you something right there.
You would have to talk to Lionel, and don't forget that Lionel does have Black Crypto Talk on every Thursday at 8:30 Eastern Standard Time, 7:30 Central Standard Time. For those of you who are interested, make sure you check out his hangout from last night. I think he went over some of this stuff previously in one of his videos.
Also, check out his Full with Money YouTube channel. Let me dig it up and I'll post it in the chat.
Yeah. So it's about to get real. It's about to get clear.
Yeah, yeah.
So basically, if you trade in cryptocurrency, at a minimum, I mean, I'm not encouraging anybody not to pay their taxes, but that's up to you. But whether you pay it or not, at least collect the daggone records and keep the records organized, the transactions.
Hmm.
Because just in case, if you have to, it could get that could be a pain. Even when you intend to pay, but you don't have the records to be able to calculate it. That's a whole nother pain. You
I would
know.
love to know what happens when you do lose your digital wallet when it becomes compromised and you lose, a few, a substantial amount of money. How is that reported? Is it reported as a loss? Is it? I don't. I'd be curious to know how that's worked out.
Yeah, that would be interesting. Yeah. Yeah. Is it a loss or right? Yeah. How is that?
And how do you report something like that? Because okay, you've made these gains in this wallet, but then all of a sudden your wallet disappears. Well, how do they prove that your wallet is gone?
Or do you have to pay the taxes on it anyway?
Right.
Because then everybody could say I made the gain, but then somebody stole my wallet.
Hmm.
It's like saying, I just, you buy, I guess, no, I can't say buy a car. That's not a capital gain. I
Hmm.
guess I can't think of any equivalent. Can't buy a house and somebody steal that. So
Hmm.
yeah, it's a whole new category. But yeah, they're clarifying it. If they start coming after people, we're going to get real clear real fast about which cryptocurrencies are taxable, which are not. We're going to get clear real fast, and maybe that's the reason why they're doing this. Sending out a, a warning shot to get everybody kind of scared, and at least scared enough to keep the records
Yeah.
just
Don't
in
don't be
case.
yeah don't be a fool with your money. Subscribe to Lionel. We also got our big bro from the Rotten Apple. What's going on, Lagon?
Hey, yo.
Hey yo, Rotten Apple, I'm offended. What's up,
What's
fellows?
going on?
Yo.
What's going on, Complex?
Let's go with you.
Dollar Will
What's going on?
and Brother Mike in the chat,
DE.
of course. Oh, DE, what's up, DE? Is DE there? Oh, look like the white man.
You
Look,
might
look
just
like
have
the
to
white
wait for
man
a
got him
second.
on. Look like the white man got a foot on his neck.
No, I think DE is flying right now.
Okay.
All right, let me get to this next article. All right, this one is from the Financial Times. Trump warns China may delay trade agreement till after the U.S. election. President Trump, President Donald Trump has warned that China may not strike an agreement to end the more than year-long trade war between the two economic powers until after the U.S. presidential election in November 2020. That's a long time. I think that China will probably say, "Let's wait," Mr. Trump said on Friday as his negotiators prepared to fly to China for the first trade talks since he reached a truce with Xi Jinping, Chinese president, at last month's G20 in Osaka. When I win, like almost immediately, they are going to sign deals, Mr. Trump said in the Oval Office. The U.S. president spoke as Steve Mnuchin, Treasury Secretary, and Robert um, Lighthizer, U.S. Trade Representative, prepared to restart talks with Liu He, the Chinese trade negotiator, in Shanghai on July 30th. The Trump administration is attempting to resurrect trade talks that collapsed in May after Washington accused Beijing of reneging on a deal that had been agreed in principle, a claim that the Chinese government has rejected. Mr. Trump and Mr. Xi paved the way for resurrecting the talks when they met at the G20 in late June and reached a truce in which the U.S. president agreed to hold off imposing further tariffs on imports from China. Mr. Trump also signaled that his administration would adopt a softer stance on Huawei, the Chinese telecommunications group that U.S. intelligence agencies worry could help China engage in cyber espionage. When negotiations between the two countries previously faltered, Mr. Trump claimed that China would rather deal with Joe Biden, the former vice president who leads the opinion polls for the Democratic presidential nomination. But his comments on Friday appeared to set a pessimistic tone ahead of the negotiations in Shanghai next week, which U.S. farmers and companies hope will end the trade war that began in March 2018. China has to be looking at the prospects of negotiating with President Trump and asking itself, what's the point? Said Chad Brown, a trade expert at the Peterson Institute for International Economics. Even anything that might be agreed now is extremely likely to be short-term fix, given how trigger-happy he has shown to be on tariffs. Mr. Trump spoke after the release of a poll by Fox News, the conservative television network, that showed that Mr. Biden would beat the president by 10 percentage points in a general election matchup. Earlier on Friday, he slammed the network, saying that they were not proud warriors. They had been in 2016. New Fox polls, which have always been terrible to me, they had me losing big to crooked Hillary, have me down to Sleepy Joe. Mr. Trump wrote on Twitter, invoking one of his nicknames for Mr. Biden. U.S. companies have urged Mr. Trump to end the trade war, which has resulted in higher retail prices for consumers and has hurt American farmers because of retaliatory tariffs from China. The Trump administration this week unveiled a $16 billion package of subsidies aimed at helping farmers across the country. Early this week, the IMF said it had become more pessimistic over the past 3 months about the global economy. In an update to its economic outlook, the fund cited the prospect of a further escalating in the U.S.-China trade war as a reason for downgrading its forecast for 2019 global growth to 3.2%. This is a disaster. Not so much for the country, but for this guy. If he thinks that he can hold out, until 2020, he's in for a rude awakening. These guys want to deal with big dog Joe Biden, and if the thing is, those states that are affected by these trade wars with China, from the U.S. farmers' perspective, are all states that support this tangerine tyrant. And I don't know how long he can play Russian roulette with a loaded gun.
He can play Russian roulette as long as the Democrats don't show themselves to be a viable threat. That's the reason why he can kind of talk the way he talks, man. Because how many? There's like over 20 Democratic presidential candidates. I mean, think about that. That's a lot. Who do you choose?
That's a brigade.
Yeah, you know what I mean? I mean, if they all like linked up and formed Voltron, then yeah, I think we might be getting somewhere. But I mean, I'm gonna tell you right now, as soon as Biden really starts to show some sort of lead or an advantage in all of this, more of that creepy Joe meme is gonna start to show itself out there. More of him groping like underage girls and all that type of shit, like that already has a damning effect. I mean, some say that Joe Biden's numbers are actually being propped up over people like Bernie and Elizabeth Warren, right, and even Kamala Harris to an extent. You see, so I could see why the Chinese would probably rather do business with somebody like a Joe Biden. You know, he hasn't necessarily shied away from being an open, partner like that, in terms of like, doing global business. Whereas Trump, you know, his administration kind of took a turn and went insular and went protectionist, and then forced renegotiations, you know, onto the table. So, you know, I can't see the Biden thing. I don't know. I can't see the Biden thing happening because I can't see the Democrats pulling out a win. Go ahead and go.
Well, because Biden is a big union guy, so you know he gets those union states, man. That can play a strong role.
Okay, yeah. That's a key thing. The Chinese are playing towards the more union states as well. They understand that. Remember, it was Wisconsin, it was Michigan and Pennsylvania that won it for Trump in the EC. Biden could potentially turn those around. Potentially, not saying that he will, but he could. Those are the three states that kind of turned around and kind of gave, or was Iowa. Iowa, and it was Michigan, and it was Pennsylvania.
All the soybean states
that gave Trump the victory.
Mm-hmm.
Okay, and that was more a loss on Hillary than it was really a win for Trump, because Hillary was abysmal. She was abysmal. The Chinese also has dealt with Biden before, VP, okay, under the Obama administration.
Yep.
Okay, I'm familiar with him. So he's got a little inside track there as well. Don't forget that. So they're kind of more familiar with who they know and who they feel they can trust a bit more, as opposed to the orange guy. So that's kind of where they're at. You know, the Chinese are sophisticated. They know what's going on politically inside of our country. They know red and blue states. They know the manufacturing and the non-manufacturing states. That's why these tariffs and so forth that are hitting the states that are really strong on the manufacturing side. The Chinese know that, and they know that that's something that somebody else comes in and speaks cogently towards and really helps those states out from a business perspective. Might turn around and vote for that candidate. The Chinese are fully aware of this, sophisticated, and so they understand that. So whether Biden or not will make it through this gauntlet of all these candidates that are there is another question. But if he does turn out to be the candidate, I do think in the general, I was thinking maybe it was going to be a cakewalk for Trump, but I don't know. I don't know if Trump has expanded his base that well. So, let's see. Let's see what happens. There's a possibility that Biden could overturn things. I still have my doubts, but there's a possibility. But they're familiar with him. The Chinese are familiar with this guy. That's one of the key things I think we need to think about when we talk about Biden and some of the things that are going on internationally. Because he was vice president for 8 years. And he knows all the players.
Anybody else have anything they want to add to this? Going once, going twice.
Sold.
Yeah, let me go on to the next article then. I think DE might be eating his porridge. All right, next one is from Forbes.com. How close is China to a financial crisis? China haters have been waiting for a financial crisis out of China since at least the early 2000s. Each and every time the People's Bank of China China's plunge protection team or the central planners in Beijing would throw buckets of ice water on their hands. This time might be different. This time they are dealing with a trade war. Most investment banks have some proprietary model that gives their fund managers a gauge on crisis. For Nomura Securities, no country is flashing red more than China. China has the second highest number of flashing early warning indicators after Hong Kong, says Rob Subramara, Subaraman, as Asia economist for Numera in Singapore. Months of protests against installed prisoner extradition bill with China have turned into protests against the Hong Kong government, with the very real possibility of the U.S. doing away with its special trade relationship with Hong Kong. If that ever happened with Hong Kong, if that ever happened, the Hong Kong dollar would no longer be a de facto source of U.S. dollars for mainland China, assuming Washington included Hong Kong in its mainland China tariff regime. Chinese policymakers need to guard against a renewed build-up of financial stability risk. Subamarahan says, out of out of hmm, out of 60 warning indicators flashing on Numera's Cassandra risk assessment program, Hong Kong has 49 covered. China has 25. The U.S. has precisely 0. Cassandra has reliably signaled around two-thirds of the past 50 financial crises in a sample of 30 emerging market and advanced countries, including the U.S. since the early 1990s. Numera says. Cassandra looks at 5 early warning indicators, including debt service ratio gap (DSR) with a particular country's historic average, joint credit and real property price gaps with the average joint credit and real effective exchange rate gaps, joint DSR and REER gaps, and finally a combination of all 3 credit indicators above. The predefined thresholds of pain points for a country are set in a way that the early warning indicators flash when one of those thresholds is breached. That means a crisis is likely to hit within 3 years. However, China haters, don't get your hopes up. A financial crisis doesn't have to be all encompassing like the Great Recession, and China has tightened its credit conditions until recently, actually. So it started the year after fewer red lights going off on the Cassandra dashboard than it did in 2018. From historical results, at least 30 flashing early warning indicators has signaled a threshold breach since the early 1990s, and 17 countries that have had 30 or more flashing indicators either experienced a financial crisis, 14 out of 17 countries, or a large-scale drop in domestic demand, 12 out of 17 within 3 years. Chinese growth is critical for many emerging markets, especially those inhabiting China's orbit. In fact, the only countries facing a higher potential for a financial crisis in the next 12 quarters are all in Asia. China is also important for global fund managers. Emerging market equities are barely above 2007 peaks, even though the Chinese economy has grown from 3.5 trillion to 13.6 trillion as of December of 2018. In other words, no one but the China Uber bears want a financial crisis in China. Chinese GDP growth over the last several years has centered on a number of things beyond the market's favorite consumer spending. It has been based on commodity hoarding, oversupplying, and fixed asset investment in things like roads, rail, and real estate primarily. Drive through second and third tier cities in China, and one is bound to see lanes and lanes of roads with few drivers. Rows upon rows of identical apartment buildings, but no curtains in the windows and very few cars in the parking lots. China's investment share in GDP was greater than South Korea and Japan when they pursued investment-led growth. Though many say that it is because China has 1.2 billion mouths to feed. China's GDP growth is driven in large part of over manufacturing widgets they cannot sell and houses no one has yet moved into. Much of this is a uh, proven, present, sorry, it was a tough time tonight. I'm tired.
Provincial.
Yeah, provincial problem after the Beijing problem. Beijing has tried to get under get this under control with varying degrees of success. But after the economy slows down to 6% and under, as Barclays Capital predicted last month, due to tariffs, China is loosening its credit policies, allowing for banks to lend more to small and mid-sized businesses. And these risks increase. China's early warning indicators on numerous Cassandra program will start catching up to Hong Kong. This has been long known. If you've been paying attention to the China report, China has a housing bubble that is about to explode, probably in the next 9 to 12 months. By early 2020, it's going to explode because no one's living in those houses. They're doing too much construction, and there's no return on investment. And the policies of marriage taxes people higher for moving into these condos. And what happens here is people are starting to divorce now in China in order to avoid the taxation of these properties.
And this was like a problem that was created like some years ago when they went on that building boom and essentially just built, and they have documentaries on this stuff like ghost cities.
Oh yeah,
You know,
they got
yeah,
places that look. They got places that look just like France with the Eiffel Tower in Paris.
yeah, they completely rebuilt like it's like the fascia of these communities like are like you said like the UK, France, all these different places that it's supposed to mimic. I'm not really well in the article. It goes into why at a certain point it was a economic strategy to kind of bolster what it was that they were doing. But when you kind of fast forward, you know, some years into the future, things like like a one child policy.
Yeah,
There's all these other variables, right? That divorce that's now an ascending trend in China, like divorce.
yeah, they got a lot of guys going MGTOW.
Yeah,
Yeah.
you know.
I think that housing issue, and Nagone can correct me if I'm wrong. I think that was created or started creating that problem as far back as like what 2008 when in that housing bubble. I think they've been doing that for a while.
Well, yeah, because they've been trying to. They need to manufacture. Well, they need to manufacture good staples in order to keep the economy going. And even if no one's living in those facilities, those condos and whatnot, they have to be built in order to keep their economy going nonstop. So it's supposed to be
Who's paying for it?
they're paying for it, right? They're paying for it, but the idea is to keep people working and keep the cycle going, right? Keep the engine going. And unfortunately, it costs so much money to live in these areas if you're married that it almost defeats the purpose of even moving there. The idea was to actually move that generation X, those millennials into those cities, and unfortunately, they can't afford to live there because there's no return on investment. Not return on investment. There's no one. There's no interest. There's no immediate interest, and number two, the amount of money they're being paid doesn't allow them to afford to live there. So
that's the bottom line right there. They're not making enough money to stay there. That's the problem. That's why that's also holding a lot of people back from actually getting married. They actually have an economy that's supposed to be growing, but the wages are still fairly low for a lot of Chinese, and they don't have the money to live there and be married. That's the problem.
And they're not allowing outsiders to come in and buy the property. That's a big problem. So now their REITs are going to stumble within by 2020.
Yep, man. Too bad Scholar Chang isn't here, man. He can really get into that in more depth. Scholar Chang, where are you? Yeah.
Say that too loud. I think the U.S. government is going around harassing students. So, I know DE was you were just in what, Taiwan?
I think he
I
said
don't
the
think
Philippines.
I think he was in Taipei like a couple weeks ago.
Oh, okay.
Yeah. All right, let me get to this next article because I don't think anybody else has anything they want to add to this. We can just fly through this, and then we'll probably have a car hangout after this is over.
Yes.
All right, this one is from the NewYorkTimes.com. China needs new places to sell its mountain of stuff. Faced with severe factory overcapacity at home and tariffs on exports to the U.S., Beijing wants to finish a much-delayed Asian-free trade pact. Beijing, China has too many factories making too many goods. Thanks to its punishing trade war with the United States, its biggest overseas customers isn't buying like before. So China is seeking new customers. They could prove to be a hard sell. China this week formally restarted its efforts to create a free trade zone across the Asia Pacific region, with an unlikely goal of striking a deal by November. If successful, the pact could eventually open markets from Australia to India. Beijing is also trying to keep alive long shot three-way talks that would lower trade barriers among China, Japan, and South Korea. More broadly, it is unilaterally reducing its own tariffs on a broad number of goods from all over the world, even as even as it's uh, even as it puts higher retaliatory tariffs on American-made goods. At stake is the health of the Chinese economy. Last week, China reported that its growth slowed to its most sluggish pace in nearly 3 decades, in part because the trade war with the Trump administration has begun to hit its crucial export sector. Global companies are now looking to shift work to other countries to avoid what could be a protracted trade war. With no end in immediate sight, China needs new markets for what it makes. It's hard to replace the U.S., but you have to try, you have to diversify, said Cheng Ding Ding. Interesting. A professor of international relations at Jinan University in Guangzhou, China. We don't want to rely on the U.S. market forever, even though it's important. But trade pacts are difficult to strike, and trade and Chinese potential free trade partners have plenty of reasons to be worried. No country can absorb the sheer volume of what China sells to American customers. China's regional neighbors compete against it in a number of industries, and China continues to maintain high tariffs and other barriers to protect its own industries. Barriers that would have to drop if other countries were to sign on. The economic clash between the United States and China has thrown the world trade system out of balance. China runs an annual surplus in manufactured goods trade of almost $1 trillion, meaning that is how much more it sells to the world than it buys each year. Nearly half of that surplus comes from trade with the United States. China's overall exports to the United States slumped 8.5% in the first half of this year. China's exports to the rest of the world have risen only 2.1%. As Beijing's trade war with Washington drags into its second year, the question now is who might buy China's extra factory goods if the United States does not? already, the country is plagued with excess capacity for making cars, steel, and other staples of global trade. More factory slowdowns and shutdown could lead to job losses and further drag down economic growth. Faced with further potential economic pain, Beijing is looking to open up other markets. The centerpiece of its efforts is a push this summer to negotiate an Asian Free Trade Pact called the Regional Comprehensive Economic Partnership, RCEP. The partnership, the partnership would encompass the 10 countries of the Association of Southeast Asia Nations, plus Australia, China, India, Japan, New Zealand, and South Korea. Mid-level and senior trade officials from across the region began meeting this week in Shenzhou, China. Their ministers are then scheduled to join them in Beijing on August 2nd and August 3rd. The goal is to outline a deal that Asian leaders might then work out at a summit meeting in Bangkok in November. We are continuing talks on this, and we hope we can accelerate the speed so that it can be concluded within this year, said Wu Jinghao, the director general of the Department of Asian Affairs at the Chinese Foreign Ministry. China's leaders have talked since 2012 about the possibility of such a regional partnership in response to Barack Obama's plans for a multi-nation trade deal called the Trans-Pacific Partnership, TPP, that would have excluded China.
Which
Working out a deal.
Trump, I was going to say, which Trump back took us out of.
Working out a deal would require solving some thorny issues. I'm not optimistic about that deal to be materialized in November. I thought this dude's name was Takashi for some reason. It probably is Takashi.
It's Takeshi.
Tomato. Chief executive of Suntory, the Japanese beverage company, and a member of a council that advises Japan's Prime Minister Shinzo Abe on economic issues. Maybe we need more time, he says. One obstacle had been China's own high tariffs. Beijing long feared that if it cut tariffs, manufacturers would flee China's surging wages and find lower cost refuge in countries like Vietnam and Bangladesh. Starting in May of last year, China began reducing its tariffs. Trade tensions with the United States were rising. Chinese leaders had also become increasingly willing to lower protective walls around the country's labor-intensive, low-tech industries so as to focus on more sophisticated manufacturing. Though average tariffs remain higher than those of the United States and the European Union, the categories for which China has reduced tariffs included many low-tech manufactured goods like handbags and low-cost garments, which many of China's neighbors would like to export. We will continue to lower overall tariffs voluntarily, remove non-tariff barriers, actively increase the import of goods and services, and enhance import facilitation, Premier Li Keqiang said in a speech on July 2nd in Dalian, China, at the summer Davos summit session of the World Economic Forum. So what's happening here is that all of these goods that they have no place else to go. I think we've talked about this on other hangouts before, that all of those goods have to go somewhere, and at some point they're gonna try to dump all of these things onto the continent.
Africa, yeah.
Yep. Yeah, they're gonna try to dump it onto the continent. There's a billion people over there ready to consume a lot of those goods that have been manufactured that can't be exported to the United States, and they're just sitting there in warehouses. Those warehouses have to be cleared out. Those goods have to be sold in order to make a profit, even if it's at a loss. This is a boomerang effect of a trade war.
Yep, because you have a surplus of stuff, and then two, your primary buyer then slaps a tariff on it. So not only do you have a surplus of the stuff, but now the surplus is more expensive, right? Typically, surpluses are actually reduced costs to get rid of it, to move it out, liquidate it, right? But the number one buyer of the surplus stuff that you've got says, no, actually, we're going to make it more expensive for you to sell it here.
Yeah, I mean the tariffs makes it harder to move the stuff, of course, but we would have this problem of the glut or China with no buyers for their products. That would be here. We would have that issue even if there were no tariffs, even if there was no trade war. It's just an overblown, overdeveloped, mature economy. We're at that point of overproduction. There's nowhere to go but down. So coming to a cutout bin near you, all the cutout bins in the world, it's going to be good bargains.
I mean, if you can get that stuff here, because I would say that,
But we got our own glut. We're choking on our own stuff.
Well, you say, I mean, but our own glut is Chinese produced largely.
Yeah, but we don't want no more of it.
Yeah.
There's your trade war and your tariffs. Trump said no more. We don't want no more. So yeah, it's just ugly. It's they're gonna have to get to open up the cutout bins, and that's so okay. So you got companies that have newer products, newer items they pay full cost for. At some point, they're going to have to cut the rates and just the books are going to look ugly. You're going to have some ugly earnings quarters. There's no way around it. They're going to have to cut the prices and sell it below cost to stop the bleeding of storing it.
Yeah, and another thing they're doing, Dollar. What we have a supplier who is now shipping out of Germany to get around tariffs, like a Chinese supplier who has a warehouse in Germany. So if you're purchasing through that warehouse, then you're getting around tariffs. So they're getting a little savvy with how to work, with and and around these tariffs.
I mean,
but we also saw that.
Go ahead, Mike.
No, I was just going to say that we also saw that Vietnam is already filled to capacity in terms of manufacturing, so they can't even take anything on anymore at this point. So
I was going to say that article you were reading earlier was talking about all the different companies, U.S.-based companies that were, and I think even some of them were foreign too, like Japanese and some other companies. They're looking to pivot their manufacturing and move it into places like Vietnam and Bangladesh and stuff like that.
Oh yeah. Go ahead, Dollar.
What the companies have in their U.S. companies, and I'm just kind of making a relationship how it could affect the stock market. Not could, will. What the companies have in their favor is that everybody's earnings is going to look horrible, so they can blame it on the macro, which I mean that's where it belongs, and the CEOs can avoid like personal scrutiny. Otherwise, I mean, in a different point in the cycle, everyone would question the effectiveness of management. But because this is a macro issue, so that's good for management. They can just blame the economy and and not have to pay with their jobs.
All right, let me get to this next article. Forbes.com, China's investments in Africa. What the data really say and the implications for Europe. Investment at the heart of Africa's needs, being the continent with the fastest growing population, but receiving less foreign direct investment, FDI, than any other emerging region, except for Central Asian transition economies. In other words, if we were to calculate inward FDI per capita, Africa would be the region of the world with the least inflows in given their population trends and the current level of development, clearly the largest needs. This this in self this itself justifies a keen interest in better understanding China's investor role in Africa. One of the first misconceptions is that the idea that China is making a massive amount of investments in Africa. While many analysts focus on China's landmark merger and acquisition deals in Africa, especially in the energy and metals industry, the result is that China's project finance and uh, China's project finance in Africa in African countries is nearly 10 times as large. In other words, actual investment by China in Africa is much smaller than debt generating flows, and in particular, project finance. Even when focusing on investment only, it is quite clear that China's investment in Africa is still at the early stages compared with the compared with that of key European countries that have a colonial past in Africa, especially France and the UK. In fact, the FDI stocks source, respectively, from the UK and France into Africa are each still larger than the stocks sourced from China. Interesting. Thus, it is fair to say that China is catching up in accumulating outward FDI into Africa to a level which is commensurate with its economic size and long term political ties with the African region. Narrowing the issue down to the speed of such convergence, the data surprisingly shows that China is not yet the largest investor, even in terms of FDI flows. China's dominance has been more obvious as an acquirer of assets, merger and acquisition, while EU and US FDI have been more volatile, with some large divestments from 2016 to 2018. However, the bulk of the FDI received by Africa's received by Africa is greenfield, and Europe countries. Europe continues to stand out as the largest investor. Another important aspect of the Chinese investments in Africa is its sectoral concentration. With the exception of a relatively small part of greenfield investment in manufacturing, the bulk of China's investment or lending, in the case of project finance, is directed towards China's strategic objectives, namely securing access to resources and using China's excess capacity in construction and transportation. On the basis, it is not surprising that the job creation of Chinese FDI into Africa through greenfield investment is lower on average than that of China's greenfield investment into other regions of the world. 2.24 people for every $1 million invested. This in itself could be one of the key problems that China may be facing when continuing to invest in Africa in the future. Africa is the fastest growing region population wise, but China's FDI into Africa is creating fewer jobs per unit of investment on average. For such inward FDI to be welcome and thus sustainable, its nature will need to change so as to create more jobs. In other words, for China to be successful in its investment in strategy in Africa, it will need to move from focusing its investment in natural resources and infrastructure to manufacturing, which is more labor intensive.
Okay, we've been pushing. I don't mean to cut you off, Mike, but damn, we've been pushing this African narrative for I don't know how since this platform has started. We've been saying this like it's there for the taking. If you honestly think that China's in there and they now own the continent, wrong.
Mhm.
Wrong, and wrong again.
The investment is in the infrastructure. The infrastructure is the investment.
Right. They can't just own the country. They can't own the continent like that. And this article is proof positive. So you may say that we've been sounding crazy this whole time, saying, you know what we need to do? We need to get our trans global business game up and we need to start making trade and business and financial transactions. We need to start making this stuff happen between brothers and sisters on the continent and ADOS here, because all of the it's a fair game for you to do it, and it's not as if they haven't told us by mouth that that's what they would prefer. And just by this article, you can even see that China is not leveraged to just quote unquote own the continent. Like they're not.
Well, hold on 1 second. I've heard by some people. I heard them say they don't like you over there. You shouldn't be doing that. You stay over here. Stay over here with our ADOS family. Don't go over there. They don't like you.
You sound like somebody when you say that and go,
Yeah. Obama. And we gotta create a black politics. And like you over there. Anyway, I'm sorry.
is that your Yvette Carnell impression?
Hashtag ADOS.
I take it that was your impression. That was your...
I mentioned no names. Anyway, kid invest over there. They don't like you over there. They don't like
okay.
You.
Well, you know what? I mean, okay. That's an opinion that one could firmly hold. That's fine. But the data in that article suggests otherwise.
Man, come on. People are talking crazy. Of course, we have to go over there and take a look. We talk about.
As opposed to how loved we are.
Yeah, right.
They loving us to death over here.
So true, Dollar Will, so true. Anyway, just want to bring that up.
When was the last time you saw Officer Friendly? Bad joke. Remember they used to have that program in school when we were kids? Well, I mean, we meaning like they're going old grade.
I'm about to say, man, I never heard Officer Friendly.
Oh yeah,
we had Officer Friendly on the East Coast.
Oh, okay.
No. On the East Coast. Okay, they had a band, man. They would come in and the police officers' band would play. Just build, community relations and make.
No, we had a show on Officer Joe Bolton. I don't know if you guys remember him. That I'm going way back. We going back 50 years. Maybe a little bit more. Officer Joe Bolton. He's come on after school and whatever. Come out there and he'd be swinging his little stick around and all that. And he was a friendly guy, man. That was your man.
Yeah. Do they do that? I know this is off topic, but do they do that still? Have police officer come into the school to build relations and strengthen relations?
Yeah, they use ice cream trucks now.
Well, I remember with my kids, they had the DARE program. So the officers would come in there and they would meet and they would talk about DARE. This was drugs. I forget what the DARE stood for. Maybe some people out there might remember it, but it was an anti-drug program for the kids and all that. And they knew all the kids.
It was drug abuse resistance education.
There we go. And they had that going on, and it was pretty cool because I remember one time I was going to my house and I was getting pulled over by a police officer. Thought he was speeding. He goes, "Your son Connor?" I was like, "Yeah, that's my son." He goes, "Oh, okay, man. Okay, we're cool. So they knew all the students and so they knew the parents and it was cool like that. So it was there some level of community relations, but then again, the community was pretty upscale. So the cops were real cool to you, if you know what I'm saying. I'm sure if it was somewhere in another part of town, it might not have been as cool, but they were cool with us. But yeah, so the cops were coming into schools and they were giving these lectures and stuff and just getting the kids up on it because people were using a lot of drugs and the opioid problem was starting to hit there as well, and it was hitting the upscale communities a bit more. It's unbelievable that may sound, but that's how it was going. So, yeah, the cops were coming in. He definitely was still coming in.
All right, let me get to this last article. This one's from Bloomberg.com. Africa's cities are about to boom and maybe explode. The West seems unaware that Africa's future is urban. Oh man, Africa is rural, what's or that's what senior Western officials envision when they talk about the continent. America's top diplomat for the region, Tibor Nagy, recently said that Africa is, by and large, an agricultural society. He isn't alone. Germany's recent Marshall Plan with Africa insists that rural areas will determine Africa's future. This is wrong, dangerously wrong. I'm trying to see if I can get behind the paywall. All right, let me share my screen real quick. Africa is increasingly urbanized, and its future will be shaped not in sleepy remote spaces, but in dense, vibrant clusters of Lagos, Addis Ababa, and Kinshasa. Big cities are becoming the engine of the continent with huge implications for future energy needs, security, governance, and public services, as well as uh, risking risk if urban growth is poorly managed. According to the World Bank, urbanization is the single most important transformation the African continent will undergo this century. Sub-Saharan Africa is nearly 40% urban, while tens of millions of people are flooding into cities every year. By 2050, it's estimated that the continent will host at least 9 megacities of more than 10 million people and more than 2 dozen in excess of 5 million, about the size of a metropolitan Washington. Many are far off the current radar. Uh, Anton, Antananarivo in Madagascar, Guinea's capital of Conakry, and in N'Djamena in Chad. Cities, of course, have for millennia been the focus of economic activity with wealth creation and especially jobs. By one detailed measure, Africa's consumers class is already more than 300 million and heavily concentrated in a handful of large metropolitan areas such as Cairo, Johannesburg, Kinshasa, uh, Kinshasa, Shasa, Lagos, and Luanda. The African Development Bank estimates that up to 12 million young Africans finish school and join the job market each year. The most attractive, well-paid, and high productivity jobs in finance, information technology, creative arts, data processing, and even manufacturing will nearly all be in densely populated clusters. But of course, urbanization has serious downsides. On average, 60% of Africa's city dwellers live in slums, and they suffer disproportionately from communicable and non-communicable diseases. Age is age prevalence is generally higher for urban populations than rural peers, and obesity is rising. I wonder why. Africa's path to joining the global economy rests on the success or failure of its cities, not on rural communities. Despite breathless press, such as New York Times article on efforts to make farming sexy, agriculture provides poor employment prospects, especially for the young and educated. Similarly, a wave of new donor efforts to electrify Africa are mostly focused on delivering small solar home systems in rural areas. These can provide a few lights for poor remote households, but they are inadequate for the needs of city lifestyles and useless for industry and commerce where jobs are created. Given all of this, it's shocking that Western efforts to aid the continent continue to be focused on outdated rural paradigm. They must reorient towards the cities. According to the United States Agency for International Development's Foreign Aid Dashboard, Washington spends more than twice as much on rural areas than urban areas in sub-Saharan Africa. Out of the 16 compacts made by the Millennium Challenge Corporation that don't directly address energy, only Zambia's program is focused on urban challenges rather than rural poverty, agriculture, health services, and the alike. Among individual donors, the UK's Department for International Development is committing significant resources to programming and research targeted at municipalities. Meanwhile, U.S. security forces are fixated on ungoverned spaces in the Sahel and Somalia, while some of the most devastating terrorist attacks have occurred in cities, including in uh, Bamako in 2017 and Nairobi in 2013. This is on. This is only going to get worse as extremist groups base operations in urban areas to tap into financial networks, get access to airports and other ways to transit international borders and waterways, and exploit a rich set of soft targets such as hotels, shopping centers, and diplomatic facilities. How can the U.S. and its allies change their approaches to face the challenge Africa's going on urban areas will pose? Here are four good ways to start. First, U.S. policy and investment should be shifted heavily toward major urban clusters rather than to countries as a whole. U.S. aid, um, which is the program, U.S. aid could program more funds to tackle urban development, while the Millennium Challenges City program in Zambia could be replicated with um, subnational compacts across the continent. The new U.S. Development Finance Corporation, launched by the Trump administration, will have more tools at its disposal to support investments in urban infrastructure, technology, and services. It could even organize a smart city initiative to accelerate partnership between African cities and U.S. technology companies on security, traffic, water, and power services, and more. Second, the U.S. could boost diplomatic engagement with municipal leaders. U.S. embassies can develop closer ties to the regional governors and mayors, while senior U.S. policymakers could welcome high performing municipal leaders to Washington and visit African city halls during foreign trips. In February 2019, the mayor of Paris hosted her counterparts from Cape Town and Durban, South Africa, and other international cities led by women to discuss climate change challenges. Third, Power Africa, a multi agency U.S. government electrification initiative launched in 2013, needs to make large scale power for big cities a priority. All successful urban areas are energy intensive, while the cost and reliability of energy is a top constraint to job creation. Much of power Africa's attention Africa's attention has been on last mile rural connections. Indeed, it's important to get electricity to communities that have never had it, and energy intensive agriculture will be needed to boost food production to feed all of the new city dwellers. But in too many places, rural electrification has come at the expense of tackling high cost and low reliability for industrial and commercial energy consumers. They are the anchors for any modern power system and will be the lifeblood of the rising megacities. Finally, the U.S. has to increase the money and training it provides to African police forces, not just military. According to the Security Assistance Monitor, police receive less than 2% of the U.S. funding for sub Saharan security services. Of the five sub Saharan African countries in the Security Governance Initiative, a joint endeavor launched by the Barack Obama administration to increase counterterrorism capacity, only Kenya has a policing component. Far more funding should be redirected from the military to the police, as well as to enhance police participation in United Nations missions. There's also utility in producing more city level analysis of security trends. One of us, Judd, previously worked in the intelligence community, although his opinions are strictly his own. American and other Western aid for African economic growth and security isn't simply a giveaway to poor nations. It can create new markets for companies and be vital components of national security in the age of global terrorism. Yet, U.S. policies are badly misaligned with Africa's future. Washington must shed outdated notions that Africa is composed of farming villages and empty deserts, and follow the data showing the continent is becoming younger, more dynamic, more energy intensive, and undeniably urban.
Hello, Mike. You there?
Yeah, go ahead, D.
Oh, sorry. I thought you was coming back. Um, this article, mm, it gives a lot of information about what uh, can be done, but it leaves out what the U.S. been doing, or what the U.S. and most of the Europeans been doing to keep the situation as it is. Um, that urban, so-called urban development, um, that's they've been keeping that from happening because if you keep a nation in the agricultural sector, you keep its people um, uneducated for the modern world. Um, you keep one of the things I've been thinking about while you were reading the last part of the article is if the U.S. Create a place in Africa where African Americans can look at and say, "Wow, that's a place I want to go." All these so-called no good people that we don't want, uh, who they claim that we only using, uh, that we only get the job here because we get special treatment from the government. All those people are going to go there in Africa, and it's going to create a situation that they can't deal with because the Africans going to embrace other black people, especially coming from America. They already look up to America, black America. They might like the white man because he's got the money, but you see, as soon as something comes out of black America, African in African men, young, especially the young, embrace it and start replicating it. Wherever you go in Africa, you see the clothes, you hear the music, they even talk like you. If you I hear people here say, you know what, I went to Japan and I met this African and they asked him where he's from. He says from New York, but he's from Africa. So they try to replicate every.
That is a fact. I don't want to laugh. You're so right about that. I remember when I was in Angola, and we went out to a club, and you saw these guys. They were trying to wear Nike sneakers, which were very expensive over there. You even had some of them that were wearing some of your baseball shirts. This is now we're talking about thousands of miles away. We're looking at what 4,000, almost 5,000 miles away from New York, and here they are wearing your clothes, trying to dress like you, and they're trying to act like when you were American, you came home for there. It was like a whole different game. That is so true. It's not even funny. Saw it in Brazil, same thing. You know, you see that down there in Colombia and these other places. That is exactly right. That is exactly right. The only time I was on the continent, like I said, they were trying to dress like it. They were trying to put your clothes on. You went to the clubs, the girl, there was weave. I ain't gonna front. There was weave running up in there as well. But folks were trying to wear your sporting clothes and all that, and you know, and You know, some of them even kind of looked like they were from New York, even though they didn't.
Well, I mean, there's a cultural imprint, man, and this is
Strong.
why. Yeah, I was gonna say this is why I push for ADOS black folks to be more globally minded, because just as a collective, we have a very insular view of the world. We think everybody outside is like against us because they didn't come to our rescue when slavery happened and all this kind of dumb shit. You know what I mean?
Great point. These are people that don't travel. You have landlocked. I call them landlocked gringos.
That's
that are up in here talking smack. Never been anywhere, but they're
right.
shooting their
I mean,
mouths
dude,
off,
look.
saying that this is what's up and all that. They don't know.
Yeah.
They don't know.
Look, Adidas is here just like it's in damn near every other country. Nike's here just like it's in every other goddamn country. All of these brands that we've created cultural fashions based around and stuff. This is the same stuff that's also available there. Right.
And they're rocking with your music up in the club and all that was kicking.
Exactly.
They were rocking it all. And when you were American, you came rolling through there. It was like, oh, he's most legit. This is all you knockoffs. Sit down. Here's the original.
That is the reason why, and that is the reason why we should not be over there doing business.
We got to be over here establishing the black politics.
Oh, there it goes.
I'm going to bring up something that you probably heard, and anybody who traveled to Brazil or Africa probably heard. You go in a club, and you meet this black girl. And she said the first question she asked you, especially in Brazil, I've been asked this question many, many, many times. You like the white girl or you like black?
Well, I haven't really heard that because
you haven't.
No. I hadn't really heard that because in Angola, when you were in there, I was with a young lady, in fact. But the fact that you were American black dude, you were terribly on. You were terribly on. Terribly on.
She want to know what
terribly on time.
She wants you, but she want to know what your choice is.
Well, they just wanted to be the choice, and they had some fine sisters up in there, and they were looking at you like, damn it, like you was some good deed. And at the end of the day, most guys in this country talking all this select, all this bullshit. Most guys don't have any idea what it is to be the bitch. And what do I mean? You walk into a club and they're looking at you like you're damn near the female and they're the guys and they're chasing you. It's a whole different mindset. But then again, like I said, you stay up in this landlocked son bitch, landlocked, dealing with these miserable people and folks, get up out of here and start moving around.
I mean, look, so damn landlocked that you could actually coerce them into a bi-coastal beef.
These folks,
that's for another discussion, though.
In the diaspora, the frenetic activity of young Africans around the world, they're really looking for your input, man. They want to be down with you in many, many, many ways, but you can't express that to anybody, especially folks who tell you don't go anywhere and we can't go any place. We got all these issues, all these guys in jail and all this. That's not so true. You have some who do, but you have a lot who can. And then most of these guys who are telling you can't travel around don't even own a passport. So I just want you guys just to think about that. But yeah, we're gonna have to start to change our thinking with respect to that.
The other part of the thing the other thing I'm thinking of is that, and you guys know better than me because you have been into business, long-term business and finance. I've been on the business end, but not in financing. And you know that in urban, distribution is better under urban, say city, big city. You get, like, take for instance New York City. Everything comes into New York City and moves out of New York City. You can't have a rural. You can't have a rural farm town where they're shipping corn to Russia. Please, it got to come through a big city. The distribution, especially if you're going to international commerce, is to large cities. So they have to grit. And that's one of the things that they kept Africa ruled for a reason. It's not only is now that when the British and the French and all these other nations were ruling Africa, they had roads put in that will bring everything that they needed from the interior down to the city that they built on the coast. When they after they left, they destroyed all of that. They pretended that they had to make Africa self-sufficient in food, and Africa was self-sufficient. You go to the village grows all the food that it needs. You know what I'm saying? It's just the international commerce. And if Africa is going to get involved in international commerce, you got to have these big cities. Because from these big cities, you're going to get the finance and the distribution that you need for doing international commerce. And that's what the America has been very strategic in doing it. And we talk about the other point just now with if you don't have any big cities, let's say people from the U.S. or black people I'm talking about, they live in an urban center in the U.S. or in Europe, Germany, England, wherever. They're not going to leave that and go to some farm in in Congo. And that's what the U.S. been pushing. You know, here the Africans starving on the farms in the Congo, but the cities are gradually developing. You got Lagos in Nigeria. It's chaotic. You got Ghana, Accra. If you guys been to Accra, I mean, man, that place is like it's like New York City. You know what I'm saying? So they've been trying to keep these big cities from growing up in Africa to keep Africa under the thumb. And that's what this article doesn't say. It say we need that. We need you to do this. But they say we've been keeping you from doing it for 100 years now.
Excellent point. They want it, and in order to keep the big cities from not growing, from growing, they don't want to see you over there as well. They were travel advisories going to Rwanda and going into into Angola. Travel advisories. Look out. Look out. Lions, tigers, bears, oh my. You know, type of deal. You know.
Ebola, civil unrest.
Civil unrest.
What you don't see, what they don't show you.
But this is what I said. You went up in there.
I was
gonna say this, DE. I was gonna say this. You went up in there, nothing going, nothing like that, nothing. In fact, Mzungus, that's what they call white boys. Mzungus running all over the joint. Americans and stuff like that. In the oil game and everything else like that. Mzungus all up in there. But yet they're over there telling you, don't be up in there. Black guys don't be up in there.
What they don't show you or what they keep from showing people.
Crazy.
That when you get on an airplane, if you get on an airplane from, I don't know, Germany, Holland, London, France, Morocco even, you get on a 777 or 67, 90% of the people on that airplane are Caucasian people.
Yeah. I mean,
and they're going. If you follow them, when they get off that airplane, they go into the hotel, and you see all of them swimming in the pools in there. Why are all these people there if it's so dangerous?
It's not. I mean, when I was there, you had a bunch of Mzungus running around in the oil game, getting paid. They were making money. They were there for business, some pleasure too, because it's a lot of fun crowd, lot to do. Beaches were off the chain, and them sisters were crazy.
Them
sisters were crazy off the chain. But what I'm saying is they were there. They were there doing business. Meanwhile, you were African American to tell you, yo, look out, lions, tigers, bears, oh my. But yet these guys are over there doing business because they don't want you there. They don't want you knowing what's going on. They don't want you competing. That's really what that was all about. And I was like, this is terrible. I was like, I
don't
couldn't
know.
believe, I couldn't believe just how modern everything was over there. You were believing that they had rebels rolling through the streets of the city shooting people down. That was not even a factor. There was no sign of it. None of that at all.
I don't
Was
know.
running all over the joint. Crazy. That's why I'm saying. And I saw that years ago, and I said, this is insane. So I understood what the effery was about that. And I saw what the media game, and I'm figuring that's mostly the advertising. Now that's put up by the CIA and these guys to keep you, and the FBI keep you from going over. That's what that was all about.
I don't know how many hotels I've been to, Lagos, Accra, and Gambia, even little Gambia. And you walk out my room, walk past the pool, and here are these 20, 21, 22, 23-year-old, 25-year-old Caucasians from Europe, all over Europe. They're selling themselves. They talking about prostitution in Africa is black, but they were there. They were prostitutes. They're living in Africa. See what I'm saying? So
Who would pay for that though?
the
Who
Caucasian
would pay
men,
for that?
the Caucasian men, and the rich Africans.
Yep, and Russian women were up in there as well.
Oh yeah,
Russian
Iranian,
women, the babushkas was up in
German
there as
women,
well.
British women. The British women go down there for the Africans.
And
German women go down there for Africans. The Spanish women go down there for the Africans.
And the Russian women were there, and a lot of them were prostitutes as well. So I mean, I just thought, you don't know. They try to see, this is the real fear that I see that's going on. But they really, the real fear they have are black people linking up from North America, South America, and Africa, and putting that old triangle back together now as a new economic power, because they know when that happens,
Well,
it's a wrap. And that's what they really don't want you to do. They don't want that to happen.
well,
Okay,
well,
Brazil
we
and
covered that.
America. Go ahead, Mike. Go ahead.
No, I was
Go ahead,
saying
man.
we covered that in an article. I think a couple months ago, with Barbados being the center piece behind all of this.
But Barbados may be playing a key role. I believe we did speak on that, in talking about really linking up a real new type of AU and playing a central role. Yeah, they could certainly play a nice role there for sure. But when we look at that potential linking up of Africans of the diaspora, especially North America, South America, and then Africa, along with the Caribbean islands, and the Afro Americans, pretty much being playing a very key pivot point there. This is something that a lot of nations, European nations, and America in itself are definitely afraid of. They don't want that to happen. They don't want that to happen because they know that if you link up business-wise and economically and politically, you can put a lot of pressure on the world in some very powerful ways. That's something we haven't done in hundreds of years, and if we were able to do that, this would it would be a game changer, a massive game changer, massive.
I just put
Politics, everything.
I just put a thing in the chat for a video that there's a lady who's trying to encourage the diaspora. She is also from East Africa, Northeast Africa. And she will help you get into business in Africa. One of the places that she is trying to push is a place called Dodoma, which is going to be the new capital of Tanzania. And one of the things that she was talking about in her videos is that they're trying to build an infrastructure, but they have government officials, people who coming in internationally, and these people can't even find a place to stay in Dodoma. That they need they need restaurants, they need hotels, they need all kind of accommodation, and that would be
D, who are they? Who is she soliciting for this?
Yeah, I sent you guys a video.
No,
Last
no, I
time.
said
Yeah, we
who is
can't
she?
play. We can't play other people's videos.
No,
Yeah,
no,
no,
no.
but I'm just asking the question though. Who is she soliciting?
She's soliciting anybody who wants to invest in Africa, especially black people. She's
Oh,
specifically
okay. That's what I wanted you to say. Yeah.
she's specifically going for black people. The
Because
diaspora.
look, there's this notion. People think that we are absolutely out of our minds, batshit crazy when we say that we're hearing it from their mouths that they would like for us to be there. So I just really wanted you to kind of push that button on that one and let the people listening in know that who it is that they were desiring to come there and do business with them.
Hold on a second. They don't like you over there. They don't like you over there. I tell you, they don't like you over there.
You
We
know,
got to
Go
develop.
ahead, D.
We got to
Go
develop
ahead,
black
D.
politics. I'm sorry.
she specifically says diaspora because she's also from the diaspora. And she says, I went to Germany, I made a lot of money, I came back home to Africa. The reason why I came back home to Africa to do business, encouraging people to come back home to do business in Africa, is because we can, if we come back, even if I create one job or two jobs, I keep uh, uh, um, the people who are trying to get across the Mediterranean and dying from doing that. I can bring education to Africa. You are going to benefit when you bring your business to Africa. Not only are you going to benefit, but what you are doing is going to be creating a stronger Africa, which all the things that you see, people tell you negative about Africa, you will be able to do something about it. And I know we can't play other people's videos, but I send it to everybody so that they can see. I just put it in the chat so that other people can go and look at it themselves and decide whether or not it's a good idea for them.
All right, let
Without,
me read
without,
this real quick.
I just want to say very quickly, we have people here, literally. You know, yeah. I'm kind of messing with the Bet Carnell a little bit. Yeah, I'll call her out. Yeah, she's up in there on her channel before. You know, telling blacks not to worry about Africans, not to go over there. They don't like you and all this kind of stuff. And I'm like,
Well, yeah.
why would somebody who's got a big platform like this say this kind of stuff? I mean,
Well,
we
because
have
she
to.
can't exercise her relationship over there.
Yeah. I would agree 100%.
Ouch.
Oh my God.
Ouch.
And wow. Anyway, woohoo. But yeah, that is something, you know.
Mike, are you saying they don't enjoy Taco Tuesdays there?
It'd be taco no days over there.
Ah.
Well, well, that's something that, you
Two
know,
vertical smiles don't. Yeah, two vertical smiles are not appreciated in one room.
well,
Like
she,
real.
you know,
Ouch.
we
Ouch.
shouldn't have people saying these kind of things without having all the, we shouldn't be out here going against ourselves. We need to think a little bit broader. And what kind of bothers me a little bit is how we have people here in this country who's supposedly intelligent, knowledgeable, saying these kind of things. I mean, we need to think a little bit broader than that. You know, I'm surprised at
All
some
right,
of the thinking
me
that we have. Go ahead, Mike.
all right. Let
Go
me
ahead.
read this article real quick. We covered this before, but I'm just reiterating it. Face to face Africa. Barbados drops visa requirements for these 8 African countries. With its eyes set on making the country the #1 business and travel destination in the Caribbean, Barbados is making it easier for citizens of various African countries to visit with ease. The Minister of Foreign Affairs and Foreign Trade Senator Dr. Jerome Walcott announced that the government has supported the cancellation of visa for citizens of several African countries, which will be implemented with immediate effect. The new implementation affects countries including Cameroon, Ethiopia, Liberia, Morocco, Senegal, Rwanda, Burkina Faso, and Ghana, from which Barbados receives a lot of visitors and has several ties. Citizens from these countries will therefore not need a visa when traveling to Barbados. We recognize that Africa, a continent of 54 countries, many of them showing great growth rate of 5, 6, or 7% in terms of Rwanda, it is time for us to look more closely at the continent. We have made a pledge and we are moving towards establishing a mission in Accra Ghana before the end of this year, he said. Dr. Jerome Wolcott stated that the move was also to bring African and Caribbean in the Caribbean a step closer as the two share similarities through a common history and could work together to project the black community. We recognize in terms of travel that the stipulations for visas are sometimes a deterrent for tourists and those seeking to establish business with the country. They find it fairly complicated. In this regard, the cabinet of Barbados agreed to remove the visa requirements for several countries in different parts of the world, he said at a press conference last week. The visa exemption has also been extended to other countries across the world, including the Gulf states of Bahrain, Jordan, Oman, and Qatar, as well as Asian countries of Indonesia, Vietnam, Thailand, and India. So, the goal is to unify the black community, and Barbados wants to be the leader behind this.
Every good reason for us to stay out.
What was that complex?
I said, yeah, that's every good reason for ADOS to not take an interest in anything, right? Because everywhere else it seems as though as melanated folks on various locales and continents are making maneuvers to say, hey, look, let's close links here, and let's open up lines of trade and business amongst ourselves. And you've heard you've heard our big bro here snapping on a prominent YouTuber and political wonk, telling you that that's not exactly in your interest, or what good would come out of something like that, or that your interest would be wasted in pursuing something like this, where it seems as though that seems to be the interest of everybody else except us.
Yeah, I don't know what else to say outside of people are missing the boat on global opportunities in the fourth industrialized economy. Um, those who say otherwise, are the ones sitting there waiting for reparations, and they will pay a heavy price in the next coming years. We read an article last week on Black business intelligence about automation and Black women, and they're saying by 2030 the ball will be out of the court of you know for a lot of people if they don't upskill and keep up with the growing economy coming forward. And for those who do not do that, or if they're not doing anything now and they don't do it by then, they are screwed royally. And not being a part of this whole entire unified black community, between the Caribbean, um, South America, Central America, and the continent, they're going to pay a heavy price, as they won't be able to, go back and forth. I'd be interested in seeing what happens in terms of visas, because if Barbados is leading the charge on this, I can only imagine, Africa would have to open up its, its books as well, for black people in America to come over there visa free, to be a part of that whole entire initiative. It can't be it can't be one way. It can't be omnidirectional or one directional way.
Mm-hmm.
Well, there are a couple of people um, that are pushing for that visa for diaspora, black diaspora people. And I forgot his name is Uhuru. He's out of Atlanta. He's on top of it right now. He's one of the people that I watch, and he's on top of it. He's in Ghana. There's a Jamaican guy who's in Ghana too, who is also pushing that. He does tours going to Ghana and South Africa and all over Africa, right? But they are building a city in Africa called Garvey Town. Just people from the diaspora can live in that town. They're already putting the roads to start building the houses and all that. The other day I was on here. I was in the background. I wasn't on the chat. I'm on the panel. And you guys play a video of this woman in Detroit who was berating this fellow African American lawmaker. And I'm thinking to myself, wow, the black women we are just thrown away. We as black men, I'm not saying all black women have done it, but we as black men, and I consider myself be a black American because when a policeman see me on the street, he look at me and see just a target, just like you see any other black American man. So I have to consider myself the same way. And anyway, but they have thrown literally just saying, you know what, we have no need for this black man. And the black men are the ones who are not doing what they're supposed to do. They get on YouTube and they argue about foolishness. I mean, it's time to stop arguing, like Paul said. It's time to stop the argument and stop the what we need to do. We know what we need to do. Just go ahead and do it. Forget about the foolishness that we get put in our head. You got to learn to be logical. Consider all the options that are available to us. If you stop considering all the options that are available to you, by the time somebody force you to look at those options, it's too late. So we have the time to do it right now. The American economy is about to tank, and we are watching a president who is pushing it into the toilet bowl as fast as he can. Only the people who are prepared for what's going to happen are going to survive. When I say survive, I mean come out without the poop that the other people are going to be stepping in. Everybody's going to be wishing that they have a $15 an hour minimum wage, but the people who are going to survive are the people who are going to be helping to make the decision. They're not going to be looking at who gets the $15 minimum wage because that's the only way we can survive. They're not looking for, I'm waiting for my reparation check. Those are not the people who are going to, who are, those are the people who are making, looking at the situation on the ground and saying, look, this is what I got to do within the next year, within the next 2 years to get through this thing and prosper. And black men got to be, I mean, if we don't start doing that, we're going to be in big trouble. I mean, because nobody else wants us. Not even the woman that sleeps in the bed with us wants us.
But DE, can you build with them or without them?
You build without them. Serious. We have to learn to build without them. And if they come later, then you say, look, these are the rules that you gotta live by. You want to live in this society, you want to live in this society that we just built. You're the one who we don't want this before. So if you want to live with us, now here are the rules. Thou shalt not, thou will do this.
There was never a time. There was never a time, right, when men didn't build. And I don't ever recall during those times when when men built great things, and at times past, that they either needed the cosign, they needed the validation. They didn't require that from women in order to go and do that. That's why it's very peculiar, very odd to me that men feel as though is that, well, before we get to doing get to the work at hand, we first need to make sure that, we're on the same page. Man, bullshit. Bullshit. I don't wait for my mom to give me the thumbs up and give me a kiss on the forehead before I pull the trigger on a business move. That's bullshit. And I think that as Paul says, you get on with it, and you go about doing what needs to be done. Like, the hell with, you know what I mean? It's kind of like, well, shit. I mean, we may as well just pack it in if that's the case. Right? If we're waiting for some sort of general consensus, we're waiting for some sort of general.
Are you talking about worrying about thinking about what a woman might think? Is that what was that?
Well, I'm following up on DE's point. I think you might have dropped out when he was talking.
Yeah.
Yeah, I'm just kind of following up on what he's saying. He's saying, hey, look, you don't need the approval, or you don't need their input.
Nah, they're not essential at all. I mean, as long as you're on top of your business game, you know what's going on.
That's it.
They're not essential whatsoever. I'm not. I don't see why that would even be brought up. I mean, if these people who would get in are smart and they have very good ideas and they want to ante up as well, okay, that's fair enough. But as a business partner, but worrying about them as as somebody you have to get approval from, that's unconscionable. Actually insane.
But Nagon, that's what drives the narrative here largely, right? I mean, the person that you've been mocking this whole evening is the opposite of a male. Let's just say that. So, but she prefers the same. So there's that whole part too. But it's like, look. Don't do me any favors. If you've basically shown once again that you are anti-progression, right? If that's what you are, then go ahead and carry out your MO in the environment that best suits you. And what I'm saying is that the affairs of men is that of business. Right. So then we need to go and handle the task at hand in that regard, because that's the venue in which we need to be functioning, not them. It doesn't really require their input like that.
Yeah.
And I'm not like despair. You already know, dude. Like, I'm indifferent. I'm not disparaging them. I don't think they're all bad or anything like that. I'm just saying that, like, look, for my own self-interest are not predicated upon how they feel.
It's about us doing business. I got to be very frank with you. I'm not even thinking about them. I'm not thinking about them unless they're rolling in and ending up some dough. Bring up some good ideas. And if they come to the table with that, fair enough. If they're not, it's not a factor.
But yeah, fuck your feelings.
I'm thinking
about. Good, Mike. I'm sorry.
Oh, you said you.
I
I just want to make sure we close out.
Yeah.
You said you don't want to be to be quite frank, and I'm wondering if the last name is Carnell.
Oh, come on, Mike. Oh, Mike, you the worst. Oh, you the worst.
All right. Let me just close this out, man, because we want to jump to the next hangout. We're gonna talk about some cars, man. We're gonna talk about that C8 tonight. Thank you all for joining us. Please hit the like button. Please hit the like button if you have not already done so. Share the video if possible. There's a document in the description beneath the video for you to refer back to. Also, as an FYI, we are not certified financial planners. If you want to certify financial planners, go to cfp.net and look up one in your area. Dollar Will, did you want to show some charts real quick, or?
I'm done, man. I'm fried.
Okay, I hear you, brother. All right, we'll get out of here and get to the next hangout in about 5 minutes. So, thank you all for joining us, and we'll see you in the next 5 minutes.